At the beginning of one's financial journey, the allure of early success can often be intoxicating. A popular quote that resonated deeply with me suggested that if you are able to purchase a house before the age of 35, you are likely on the path to secure financial stability. This idea lingered in my mind and became a benchmark for my own goals. By the age of 26, I had already achieved what many consider a significant milestone. I bought a house in Mumbai, one of the most expensive real estate markets in the world. This achievement was not just a financial milestone, but also a psychological one, reinforcing the belief that I was on the right track, making smart decisions and paving the way for continued success. However, this early success came with its own set of challenges. While purchasing the house was a wise investment, it also marked the beginning of a period of overconfidence and a belief that my financial decisions were infallible. This mindset, fueled by my initial achievements, set the stage for the mistakes that would follow, particularly during the bear market that ensued. The lessons learned during this period would prove invaluable, shaping my approach to finance and investment in the years to come. As the cryptocurrency market entered a bear phase, my financial behavior began to reflect a dangerous trend: overspending. The bear market, characterized by a prolonged period of declining prices, should have been a time for caution and careful financial management. Instead, I found myself spending more than I was earning, depleting my portfolio to fund a lifestyle that was increasingly unsustainable. The decision to sell a significant portion of my Bitcoin holdings at a low price, averaging around 5 lakhs for 20 to 30 BTC, was a clear indication of my lack of foresight and financial discipline. At the time, the value of Bitcoin had dropped significantly from its peak, and I convinced myself that selling was a necessary move to maintain my lifestyle. What I failed to realize was that I was liquidating assets that had the potential to appreciate in the future. This was a classic case of short-term thinking, focusing on immediate needs and desires without considering the long-term impact on my financial health. The belief that my portfolio was an ocean and that removing a drop here and there would have no significant impact was a dangerous delusion. It led to a gradual depletion of resources that would have been better preserved or reinvested during the downturn. During the height of my success, I began to immerse myself in the global cryptocurrency community, attending and sponsoring international blockchain conferences. These events, held in places like the United States, Hong Kong, and Singapore, were significant networking opportunities and a chance to position myself as a key player in the industry. At a time when few Indians attended such conferences, my presence there felt like a validation of my status and achievements. I was not just a participant, I was a sponsor, often taking on prominent roles in these events. This further inflated my sense of self-importance and contributed to an ever-growing ego. The problem with success is that it can lead to overconfidence. I began to believe that I was invincible, that my early achievements were a result of superior knowledge and skills. This mindset blinded me to the realities of the market and the risks that came with it. Instead of approaching these conferences as opportunities to learn and grow, I saw them as platforms to showcase my success. The accolades and recognition I received further fed into this narrative, making it harder to see the warning signs that were beginning to appear in the market. My ego became a significant barrier to making sound financial decisions, and this overconfidence would soon be tested as the market took a turn for the worse. As 2018 progressed, the cryptocurrency market began to decline sharply. Bitcoin, which had been trading above $6,000 for most of the year, finally broke this psychological level, triggering widespread panic among investors, including myself. The sharp drop to $4,000, and then further to $3,000, was a wake-up call that the market was in serious trouble. Until that point, I had maintained a belief that the market would recover, that the downturn was temporary, and that prices would bounce back by the end of the year. This belief was rooted in the experience of the 2017 correction, where similar dips were followed by strong recoveries. However, the market continued to decline, and the confidence I once had began to erode. The breaking of the $6,000 level was particularly significant because it was seen as a major support level, one that, if broken, could signal further declines. When Bitcoin dropped to $4,000 and eventually to $3,000, I realized that this was not just a temporary correction, but a full-fledged bear market. The panic set in. and I found myself making irrational decisions, such as selling off my holdings at a loss and converting everything to stablecoins. At this point, fear had taken over, and my actions were driven more by emotion than by any sound financial strategy. In the midst of this financial turmoil, I attempted to recover my losses by turning to Bitmex, a cryptocurrency exchange known for its high-risk, high-reward trading environment. My initial foray into Bitmex had been during the bull market of 2017, where I had made a decent profit by trading as Bitcoin surged from $12,000 to $20,000. Buoyed by this success, I believed that I could replicate these gains, even in a bear market. I spent considerable time learning technical analysis and other trading strategies, convinced that I could outsmart the market and recover my losses. In December 2018, I entered a global trading competition hosted by a group called Blockchain Whispers. This competition, which attracted top traders from around the world, offered a prize of 1 Bitcoin to the winner. Over the course of a month, participants were required to submit their trade calls daily, with the winner being the one who achieved the highest return on investment. To my surprise and delight, I won the competition, securing the 1 Bitcoin prize. This victory boosted my confidence significantly, reinforcing the belief that I had mastered technical analysis and that I was once again on the path to recovery. However, this newfound confidence was short-lived. While I managed to make some initial gains and even recovered a portion of my losses, the market conditions soon became increasingly challenging. The unpredictable nature of Bitcoin's price movements and the inherent risks of leverage trading on Bitmex began to take their toll. What I had initially gained was quickly eroded by a series of losses, and the realization dawned that the road to full recovery was going to be much longer and more difficult than I had anticipated. As 2019 progressed, the cryptocurrency market entered a phase characterized by choppy and unpredictable price movements. This was particularly true for Bitcoin, which experienced several sharp price swings between $4,000 and $13,500. For traders like myself, who were heavily involved in leverage trading on platforms like Bitmex, this period was especially challenging. Despite having a strong belief that the market would trend upwards, I found myself frequently caught off guard by sudden price reversals and stop-loss hunts. One of the most frustrating aspects of trading on Bitmex during this time was the platform's technical issues. Whenever there was a surge in trading volume, Bitmex's system would often become overloaded, resulting in delays and errors that made it nearly impossible to execute trades effectively. This was particularly problematic for those of us who were trading without stop-losses, relying on our ability to close positions manually. On more than one occasion, I found myself unable to close a position in time due to system errors, resulting in significant losses. The constant volatility and technical challenges led to a long losing streak, which further eroded my confidence. As the losses piled up, I began to question my strategies and even my decision to continue trading. The mental and emotional toll of these losses was considerable, and by the end of 2019, I had reached a point where I seriously considered quitting cryptocurrency trading altogether. The excitement and confidence that had characterized my earlier trading days were replaced by a deep sense of frustration and fatigue. By the beginning of 2020, the toll of the previous year's financial losses and the emotional strain of constant trading had led me to a critical decision. I needed to step away from the world of cryptocurrency trading. The once thriving markets that had brought me so much success now seemed fraught with risk and uncertainty. More importantly, the constant stress was beginning to affect my mental health and overall well-being. It became clear that I needed to take a break, to reassess my priorities, and to explore other career opportunities that would allow me to start fresh. The onset of the COVID-19 pandemic in March 2020 further influenced this decision. With the world in lockdown and the markets in turmoil, I found myself with time to reflect on my journey thus far. It was during this period that I decided to pursue a long-standing interest of mine, filmmaking. The creative freedom and the opportunity to tell stories through film offered a stark contrast to the rigid, numbers-driven world of trading. I began learning the craft of filmmaking on my own, diving into the technical aspects of directing, editing, and producing content. This new direction soon bore fruit. I directed a short documentary film that went on to be selected for 14 to 15 international film festivals and even won several awards. The success of this documentary was both unexpected and deeply rewarding. It validated my decision to step away from crypto and pursue something that I was passionate about. For a time, I fully immersed myself in filmmaking, believing that this would be my new career path. I distanced myself from the cryptocurrency community, becoming inactive on Twitter, Discord, and Telegram. To many, it seemed as though I had completely disappeared from the scene, but in reality, I was simply redirecting my energy into a new creative endeavor. As I reflect on my journey through the highs and lows of cryptocurrency trading, there are several key lessons that stand out. Lessons that are not just relevant to trading, but to any financial endeavor. One of the most important of these lessons is the critical role of risk management. In the world of trading, especially in highly volatile markets like cryptocurrency, understanding and managing risk is paramount. It's easy to get caught up in the excitement of a bull market, to believe that your success is the result of skill rather than favorable market conditions. However, when the market turns, those who have not properly managed their risk are often the first to suffer significant losses. In my case, the lack of effective risk management was evident in several ways. From failing to set proper stop losses to over-leveraging my positions, I often put myself in situations where a single market move could wipe out a significant portion of my portfolio. This was compounded by my overconfidence, a belief that I could always outmaneuver the market or recover from any setback. The reality, however, is that the market is unpredictable, and no amount of technical analysis or trading expertise can guarantee success. Another critical aspect of risk management is financial discipline, knowing where and how to allocate your resources, both in and outside of trading. During my early success, I made the mistake of conflating my trading profits with my personal wealth, spending money as though the bull market would never end. This led to overspending during the bear market, as I continued to fund a lifestyle that was no longer supported by my trading income. Proper risk management would have involved setting aside a portion of my profits for long-term investments or savings, rather than reinvesting everything back into the market. The story of my journey through the cryptocurrency market is one of both triumph and tribulation. From the initial successes that led me to believe I had mastered the market, to the harsh lessons learned during the bear market of 2018 and 2019, this journey has been filled with valuable insights. The most important takeaway from this experience is the need for humility and caution in the face of market volatility. No matter how skilled or knowledgeable you may think you are, the market has a way of humbling even the most experienced traders. As I stepped away from crypto trading in 2020 and explored new avenues, such as filmmaking, I realized that success in any field requires more than just talent or luck. It requires discipline, risk management, and the ability to adapt to changing circumstances. These are the lessons that I hope others can learn from my story. However, my journey with cryptocurrency was not over. In 2021, I made a return to the market, and what happened next was a testament to the resilience and adaptability that I had developed during my time away. In the next part of this story, I will share how I bounced back in 2021, starting from scratch and rebuilding my presence in the crypto world. It was a year filled with new challenges, opportunities, and significant achievements. I will also discuss the steps I took to revive my old projects, such as the IBC blockchain, and how I managed to restore traffic and interest in my work. If you found this story insightful, I encourage you to stay tuned for the next installment, where I will delve into the details of my comeback and the strategies that helped me succeed in a rapidly evolving market. Thank you for taking the time to listen to my story. I hope that the experiences and lessons I've shared can serve as valuable insights for your own journey, whether you're involved in cryptocurrency trading or any other field. The key takeaway from this narrative is the importance of staying grounded, maintaining financial discipline, and never underestimating the market. Success can be fleeting, but with the right mindset and approach, you can navigate through the ups and downs and come out stronger on the other side. If you enjoyed this story and found it helpful, please consider sharing it with your friends and colleagues who might benefit from these insights. Don't forget to like this video and subscribe to the channel for more content like this. If you haven't already, make sure to watch the first part of my story, where I discuss my early experiences and the rise that led to these events. I'll provide a link in the description for easy access. Also, click on the bell icon to receive notifications for future videos, so you don't miss out on the next part of this series. Once again, thank you for your support, and I look forward to sharing more of my journey with you in the next video.